The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, so come on back here to the Diagnostic Trading Hour and checking out where the markets are at right now. We got the S&P is currently up 20 points, so flying there. We got the Russell up 16. We have the Nasdaq up 31. Dow is currently up 176 points. Copper is down a little over 0.5%. We got gold up 13 points, 1% move on gold. Silver up a little over 1% right now. Natural gas just crashing on down, nearly 10% on the day. We have, and it's actually rolling over too, so make sure we're in the process of rollover this week on natural gas. We got oil is currently, let's see, it is up 93 cents. We got corn is currently down $3. We got soybeans up $12.50, so nice move there on soybeans. Euro dollar pretty flat on the day, just down a couple pips. We got Aussie dollar down 68, pound dollar up 68. So Aussie dollar up 68, pound dollar up 36. Dollar franc is up 13. We have the dollar CAD right now. It is down 36 pips, with the dollar yen up 1 single pip. We got the Aussie yen up 70 pips on settlement there. We got euro yen up 5. We got pound yen up 20. And we got the euro pound is currently down 5 pips on the day. And that wraps up where the market is at. Now, let's talk about where the market is heading off to and what's going on. What we want to look at is just the news that's coming up and, what can we do to maybe take advantage of some of that news. Nothing really major happening today, but I want to walk through each potential trade setup with you so that way we can, like I said, take advantage of the news coming on out. And then we'll also do a little market analysis while we're at it. Tonight's this week, not tonight. Today, no news. Yesterday, no high-impact news. Tuesday, no high-impact news scheduled, okay? We do have a few other reports, and so let me get those going. We'll analyze those and sort of walk through each one of them step by step so that you can be ready to potentially take advantage of them. So the first one, I got 4 on my list as potentials. Okay, for the week. I got the pound dollar, and that one is the UK Quarterly GDP report. The expectation is that the forecast will come in at 0.7. We'd like to see it as much as 0.3 off on the number, like a 1.0 or a 0.4. Get just a massive move. Our average move on the pound dollar has been 70 pips high to low. And on pound yen has been 84 pips high to low. The pound dollar has moved more consistently, that range, in the last 2 years than the pound yen. So the pound dollar is most likely going to be the better of the two choices. And 70% of the time it's actually broken 50 pips, where the last couple years the pound yen's only broken 50 pips half the time within 2 hours of the release. Why that's important is because we're looking at about a 2.5 hour window there of the 7 a.m. expiration. And so now that we got that information, let me go over and I'm going to look at this number coming out to see. Okay, let's see. We got the UK Quarterly GDP coming out on the 26th. And I want to look into a little more detail on it. See what we have here. The last report, we pull that up, and we'll walk through the trade step by step to know maybe what's the best entry time, the expectation, and like I said, how to put all the pieces together. Okay, so on the 26th, we got the second estimate GDP. It is a second estimate GDP. Okay, so it's not as a high impact as the preliminary. And the last report we had was back on November 27th. All right, so out of the GDPs, this is not the highest impact of the GDPs, but it doesn't mean that it can't move 70 pips. Actually, on average, it does move 70 pips. I'm just trying to see if I have any more detailed information on it. And from what I can see, it's just not the, trying to see if I can see any more information that might be helpful beyond just the initial GDP release. So we got all the preliminaries because they move so much. You don't ever want to miss the preliminary GDP report. That's usually one of the best reports you can trade. Yeah, that's pretty much it. That's all we got on that one. So we got 70 pips, and often on that report we're going to hop in early on the trade, and we're going to look at it to get in the trade about around midnight for a 4:30 release. And again, we expect about a 70 pip high to low. It's a good report, but as far as GDP reports, I would put the preliminary ahead of it, and a little more consistent big mover. But like I said, we've got a good ratio. We got 71% here in the last 2 years, 70% over the last 5. That's moved at least 50, and the average high to low over the last 2 years is 70 pips. So that gives us a good trade on that one. We also got a U.S. new home sales, which is coming on out this week. And let's see here. Let's see. We got pending home and new home. Trying to see what's going to be better out of that. So on U.S. new home sales and the pending home, that one's going to come out. Yeah, that's really not usually a big mover in itself. Let me pull up some information here. Get it at my fingertips for you. And, okay, so on the U.S. new home sales, we're looking really not a good report for straddle strangle, a high potential binary or butterfly because the report comes out. Let's see, that's going to be a odd report. Let me see here. I think there's something up on one of these calendars. Yeah, I think that's an error on the calendar. Okay, well, never mind. So drop the new home sales report because I'm not seeing anything on here that makes that worth looking at. Okay, so we're dropping new home sales. That one's out of the thing. So right now we got pound quarterly GDP on the 26th. And then for our pending home sales, and I'm trying to look at what we could potentially expect, what would be the big movers on that across the different pairs. And if we can get enough movement to make it worth it. And if we can, yeah, we're getting about 25, 35, 27. Let's see here. Looks like about 30 pips is about our max move. There's within normal, reasonable distance of time. I'm looking at the report coming out right at 10 o'clock, and by 3 o'clock, I mean we're basically maxing out at about it's like 30 pip move. Let's see, I got 29 pips on the last report. On the report before that, we got up to 31 pip move. On the report before that, got a 25 pip move. We then got up to 23. Then after that, wow, we didn't even move at all. I guess the highest you could say would have been 23. So from the release, okay, so yeah, 23 on that right there, and then 27 between the release and 3 o'clock, 22, 35. That's probably one of the bigger ones, and then actually had a big move at the end of the day. Something going on that day. Let's see here. I got 40 pip moves. So like one time in the last 12 months did we really exceed 30 pips, and it was at the end of the day. So you could not straddle or strangle the trade. You could look at. I'm looking at euro dollar. You could look at possibly doing a butterfly, end of day butterfly, if you can get it like 30 pips above and 30 pips below. So before the news report, let's say at 9, you go, or 9:30. You go in 9:45, so somewhere between 9:30 and 9:45, you go into like a 30 pip wide up and down. So really 60 pip wide binary butterfly, which means you'd find a strike above the market 30 pips and a strike below the market by 30 pips. Or you could literally just wait until it hits that max move. And I can tell you, let's see what time that regularly happens. Okay, 11:30, about 11. Did about the same price at 11:30. We got it at 12:30 after that, so that was a little bit later. The majority of the time, Reading that max move pretty close to the morning. Yeah, I don't know if I'd market time this one. I'd do one of two strategies. Either I would do one, a binary butterfly, if I can get one on 60 pips wide for close to a $50 risk. Okay, meaning that I have $75 risk on the long, $75 risk on the short, and I'll make $25 on both, which means if I lose $75 on one, I'll make $25 on the other. So I'll net a $50 loss either way. Or if it stays in between the ranges as of expiration, then I will make all $50. And I'm looking at the big mover to see if that butterfly still would have worked if you just would have held on to it. And it looks like that was a pretty massive move. That would have been the one trade that would have lost. But all the other ones came back within that range by 3 o'clock. So if you can get a 60 pip wide, 30 pips above, 30 pips below the market, then that looks like a solid butterfly. The other option would be if the market moves up or down approximately 25 pips, then to go ahead and go the opposite direction on at the money binary. So that'd be the other way to do it. And so when it drops down, maybe 25 pips, it goes down maybe 5 pips more, maybe not, and then reverses back up by the end of the day. And I'm looking at euro dollar right now. So this is euro dollar analysis on that report. I also could go up and maybe check out dollar yen also, see if we get anything better. That's a pretty cool way to trade the new home sales. You get a lot more varying movement. I mean, you get 10 ticks up to like 70 ticks on dollar yen, so it's a lot wilder. Euro dollar is a lot more predictable. We go to euro pound. That's a very flat pair. Let's see what we get on that. It's in the euro pound. Let's see, we got like 5 ticks, 10 ticks, 20 ticks, 5 ticks. Man, it's such a flat pair. I got 17 ticks. I got about 15. And then I got 10, 20, and like 30, 22, 15. Yeah, so I mean, it still had a pretty big variety, and you're probably going to have a hard time getting a 60 pip wide one on there. So like I said, 2 favorite trades to do on the upcoming pending home sales report. And that pending home sales report will come out on Friday at 10 a.m. Would be a butterfly. Okay? Again, to go in and look at a butterfly on the trade, if you can get it 60 pips wide on the euro dollar in a shortly before 10 o'clock for the 3 o'clock expiration, or when it moves up or down 25 pips, do an at-the-money binary and go in the other direction. And for about a $50 risk reward. So 1-to-1 on both of those. All right, stay there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhoades, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, TAZ Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos TAZ Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to TAZ Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So just a review for you. If you went in, you did this idea, like the butterfly trade, we know that'd work 11 out of 12 times. We got that down. That's 60 pips wide, 30 pips above, and 30 pips below the market. And it's pretty easy. You just use the scanner. You just go over. And if you haven't used it before, definitely check it out over on TFNN. You can check it out on the right side of the page there. You can get a Nadex account. And then over on the left side, you can scroll down, and you can get access to the scanner. And what you'd want to do is go in. And let me see here. I want to add, I'll put this up here for you. And we can walk through it. And this is how you use the scanner to find them. Okay? So once you're logged in to the scanner, you just go to binary scanner, then choose your market. So let's say you're doing euro dollar. So go here and just click on euro dollar. Okay? And I would reset filters. It's just a good practice. Okay? You can do demo or live up here at the top. So euro dollar, both directions. And then, like I said, reset all your filters because people just make that mistake. And then go, in the money. And then, you want it at 3 o'clock. So how many ever hours away that is. Right now, that's only 90 minutes away. So actually, it's about it's 95 minutes away. So I'm going to bring this thing down to 2 hours. Now, if you were entering this trade at 10 o'clock for a 3 o'clock expiration, you'd want like 5 hours. So you'd do 0 to 6. But if you really want to narrow it down, you could actually make it, say like 4 to 6. And then you wouldn't even see any of the expirations that didn't happen within, like that 3 o'clock time frame. So if I go down here, see how I only see the 7 o'clocks right now? Because they're within 4 to 6 hours. So it gets rid of all the noise. So right now, let's say we're looking at it now. If I do this, I get all of them. Okay, so let's say it was 10 o'clock. And I wanted to find these. And so I have it set to, I guess what would that be? 4 to 6 hours, right? Because at 11 o'clock, 4 o'clock, 3 o'clock. So, yeah, you may want to make it like 2 to 6 hours because I'd make it 2 to 6 hours because you don't want to cut them off because you're going to get in a little bit before 10, okay? Anyway, so 4 to 6 hours there, and then you go and you look, you go, okay, how wide can I get the trade? Can I get it wide enough? You may not be able to. I mean, like right now, there's no news expected, so you're not really going to put a wide one on at all. It's only 20 ticks wide, and you really want like 60 wide. See how that's 3740 by 3720? So that's all you'd even be able to pull off right now. Definitely not a trade I would do. I'd want there to be 60 ticks or 60 pips in between those two strikes if I was going to be doing that, okay? Now, there will be more during the day, during the morning, because there's more expected movement, so it will be wider. To show you an example here, let's just get rid of this whole time thing. And it's only 10 ticks wide with like, an hour to go. But if I go down here, I'm getting a little bit wider, 20. If I go down here, now I can get like a little bit wider. So I'm going about 40 ticks because there's more movement expected during this time. And you go further and further down. If you look like a week, 4 days, well, now you can get them, a whole lot wider. So, anyway, 60 ticks, the pricing may not be there. That's why I'm also wanting to give you a second trade. Okay, so the pricing may not be there for a 60 tick wide binary and butterfly, which is where you sell one above and you buy one below. That's 30 ticks above and 30 ticks below where the market's at. If you don't know where the market is, just click on the ticket. It'll open it up, and it'll actually tell you what the indicative price is of the euro dollar at that moment. Or you can look at a chart, which is what I recommend, but that's one way to do it. The other trade, just to go through that with you again, is, now on this one what I would do, so a little bit different, is instead of doing this, I would actually say set it to at the money trade. So I hit reset my filters and show me the at the money contract. That's going to show me the ones basically between 40 and 60 bucks. Okay, they're right around the market. And so I'll have this open. I'm going to want the 3 o'clock expiration again, okay, because this is sort of what we're playing on here. So, I'd break this to, 2 hours to, an hour and a half to, 6 hours or 4 hours, whatever. Just as long as I see my 3 p.m. showing up. And that'll let me see what's there. Now, I can click on it, and you'll notice that there is a sell. It's just going to be lower. It's going to be like 38 bucks. If you think that's too low and you want to change it up, you can make this wider. You can make it 30 to 70 if you wanted to. Okay? And if you want to make sure that was only showing you in the monies, you could hit in the money. And then it'd show you, there's not even a buy right now that's in the money. The buy is out of the money. So, or you could just not worry about it at all and just change it to 30 to 60 and see what's there. Now, the reason I'm bringing all this up is I want to teach you how to pick the strike when it does move 25 ticks up or 25 ticks down tomorrow. Be able to fade the play, and we'll talk about how many times that have actually been profitable when we get back from this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, so what we're doing is we're talking about how to, it's a little bit different news trade, because not all news reports have a great track record for us to go after. So I like to go, is there another consistent pattern that we can take advantage of on the trade? So yes, there is. What we did is I went through and I'm looking at literally every chart on the last 12 announcements. Okay? And it's very important you take profits when you do these. But what I found is you want to enter, slightly before, like right before. Okay, this is the best way to do this trade. Right before 10 o'clock. So maybe 5 minutes at most. Okay? And actually, we're not entering. So, sorry. If you're going to do the butterfly, you can actually do that anywhere between 8 and 10. I'm sorry. So anywhere between 8 and basically a few minutes before you can do a butterfly, and 30 ticks up or 30 ticks down. All right? If you can't get that fill, which there's a good chance you're not going to be able to get that fill to be able to get a decent risk reward on that trade, then the second trade, okay, is from the close of the bar right before the release. So you want to break down, you want to make sure you're looking at minute bars, and the report comes out at 10, so you want to look at 9:59. Okay, so from right before the release. Then you want to, somewhere between 10 and 2. Don't get in after 2. Okay, if it hadn't happened by 2, exit the don't cancel your working order. Okay, so between 10 and 2, you're going to choose the 3 o'clock expiration. Okay, binary. So I'll be looking at, the 3 a.m. binaries, and I can just reset all my filters. It's pretty simple. So I'm going to go down here to 3 o'clock, and if I was going to do this trade right now, I go, where was the market at? Okay, at a specific time. So let me pull up a euro-dollar chart. And let's just act as if today was Friday. And let me pull this down, get my 1 minute chart. I'm going to go look at 10 o'clock over here. All right, and then I'm going to find the 9:59 close. So 37.13. Okay, so that's the price right before the announcement came out at 10. Now, if you have different charts, make sure you pay attention to how they plot times. Like NinjaTrader plots the close time. Okay, so that's when the bar is going to close. Whereas I want to say Thinkorswim plots like the open time. Okay, so like this bar will include 9:58 to 9:59, whereas on Thinkorswim like a 9:59 bar would be a 9:59 to 10. So either way, we're going to look at the close price 37.13, and I'm going to add. Now I'm probably looking to get about 25 pips above or below, but bottom line is I'm going to add. I'm still going to do the same trade as the butterfly. Okay, I'm going to add 30 pips to it and sell, and I'm going to subtract 30 pips from it. So 30 pips added to it, 37.49. 30 pips subtracted would be, so let's find that. So 37, we got 48, maybe, and then 37.58. And now don't forget that intradays, like maybe you don't get your daily, but at 1 o'clock, between 1 and 2, you can still get in if the market's there. At 1 o'clock, you'll get 3 o'clocks also, so you'll get some extra strikes. But at 10 o'clock, you'll only have the dailies. On Friday, you'll have the weeklies as well, and you'll be able to see the dailies, weeklies at the same time, and the intradays when they populate. So you'll have the dailies and weeklies because this will be a Friday trade. And then I'm going to subtract 30 ticks. So we're going to go back over here to this chart. We're going to find the 9:59 bar. What's the low? 37.11, or close, 37.13. Okay, so we're going to subtract 30 from that. That's going to be 37.80, 36.84. Okay? So I'll go over here, and is that right? 36 below? Maybe I'm doing my math wrong. So I want to make sure I have the right number. So yeah, close, 37.13, and 36, yeah, 37.13 minus 30. So we'll want to do, go over here. Now let's find that strike. Okay. And I'm double checking my own math at this point in the day. All right, 36.83. I was right on. So 36.83. So we go down here, and there's a 36.80, which is good. Okay. Now I want to actually buy this side, and I want to sell this side. Okay, because we're going to do the opposite. Okay. And I really want that to be 30 ticks. Okay, because this is why it's so important, because the expiration. So ideally, I want that thing as close to 30 ticks, not closer than 30 as possible. And I want to sell it for as much as I can. So ideally, yeah, $50 if it moves enough. You may have to settle for $30 or $40 on the trade. That's up to you. If you're willing to hold it to make sure it gets filled to 50, then that's fine. And so basically, I just added 30 ticks from where the market was at 9:59 on the close. I subtracted 36 was. That let me know what strike I'm looking at buying and selling. Whether this be before the news comes out or after, we're still basically looking at the same thing. But after the news comes out, then we're going to pinpoint that 30 ticks above and below to that closing price. And now what I'm going to do is I'm going to go back, I'm going to look and go, okay, well, if I would have done that, how many times would it have worked? How many times would I got filled? Okay? So looking at it, if I would have chose, now my standard usually is buy at 57, sell at 43. So I do the same thing on this trade. So it's very rare I do out-of-the-money trades unless I have a lot of statistical seasonal probabilities to back it up. Okay? So you would have got filled on the last one. It dropped down basically 27 ticks or so. You would have got that 57 just barely. That's why we don't wait till 50, because a bid-ask spread and a couple ticks. And then it would have closed, let's see here, at minus 22. So that's why we're not giving anything up. Okay? So it closed at minus 22. So the last trade, if you would have waited till it got down at least 25 ticks or so, but you're looking to buy 30 ticks below or 30 ticks above, then you could have got in that at-the-money trade at 57. Now, if we would have went on over here, and let's look at the trade before that on the 30th of December, you would have got filled at about 11 p.m. It went up high enough for you to get filled on that. You got a high there, about 27 pips, so about the same thing. And then it closed at 3 at about 6.5, 7 pips off of from where the release came out. So that was a nice one. Let's see here. If we go look at the November 25th, you would not have got filled. It never moved far enough. So it stayed like in a 15-tick range the entire time. So right now, 2 and then 1 tie. And then, okay, so we go over, let's look at October 28th. And these charts are so fast, like if I try to render them on the screen, it'll mess it up. On the 28th, 10 a.m., let's see here. Okay, so it finished, if you got in that trade, we got in right at, like, so the 2 o'clock there, because you actually would have got in right at the 2 o'clock close, so 1:30, 2 o'clock. And remember, you don't get after 2, but it settled 22 ticks above. So using that 30-tick rule definitely helped you out, and you got a high enough high just to squeak out the trade. Let's see over on November. So we got 3 profits, 1 no trade. If we look over at September, we dropped down about 29 ticks by 12:30. By 3 o'clock, we were back at negative 18. So basically it pulled back up 12 pips, expired in the money. So got 5 and 1 there. We got 8.28. We flew up. Okay, flew up 28 pips. And then we closed at 27.8. So you'd be glad to use that 30. If you would have done 25, you would have pushed it by just a couple ticks. You could have easily lost on that trade. So far, 6 trades profitable, 1 trade no entry. Out of the last 7 months here, we go July 29th. Do the same thing. And we got a 25 pip high at 12. And then it got a little bit higher, like right there between 1:30 and 2. Can't enter after 2, but then at 3 o'clock it expired at 18 up, so trade profitable. Let's see here, June 27th. We got see if we even got the movement. We may not. Oh, yep, it dropped down. There we go. We got a big drop right there. Okay, so dropped down 33. You bought it. You got in. It actually went up 23. And then, so you probably wouldn't have got the fill on the other side unless you tried to put the butterfly in there. But then you got but it closed at just 6 points off of the marker. So definitely would have been profitable on that trade. And let's see here. Now, a lot of these are they literally just 5-10 ticks of movement difference between getting in when it hits that about 25 to 30 pip high and the close at 3 o'clock. So it's not really worth doing spreads on. It's really a binary trade. Let's see. On May 30th, it exploded right off the open, 29 pips, which was an explosion for this report. And then it pulled back by 3 o'clock to a close of just 9 pips off. So definitely in the money profitable trade. Went back up, which is what you want. Let's see if we look at April 29th. Ran up 27 pips. Closed out at just 10. So it pulled back, which is what you want. Closed again. March 27th. Ran up 22. Probably wouldn't have got a fill on it. If you did, you would have been profitable. 27th. Let's see here. Okay, ran up 35 pips. Ran back down to -2, so about a 37 pip retracement. And then it closed out at a 39 pip. So that one would have lost had you had held to expiration. So one of the tips, because we did one of these trades last week, and some traders did well on it, some traders didn't do well on it. And one of the things, I had noticed, make sure to take profit. Don't hold things to expiration. If I buy something or sell something for like 40 or 50 bucks, like at worst case, like $5.95, but if you really want to see where the easy money is, it's at the $15 level. Okay? So if I can sell something like at, $45, $50 and buy it back at 15, make, 20, 30 bucks on the trade, that's going to be the easiest trade I can do. Because that premium just doesn't get taken out. Let me see if I can find some good examples. But the more you're trading these, the more you'll start. US yen has a lot of strikes, so sometimes it's a good one to look at. But you'll see, like, a lot of times there's a pretty big dip, like right here. If I'm looking to get in and out of a trade, like $12.50, $4, the difference right there to buy back, that's 10 more ticks. Okay? So you'll start to notice that you'll see a solid 5, 10, 15 tick difference sometimes for just another $5 or $10. And you give that chance for it to go back. Now you would have made on the other ones, you would have made money if you didn't take profit. But on this one you lost. So you lost $60. Let's say if you got in for 40, and whereas you could have given up, $10 on like 10 other trades that you did get into, or let's say at least 9. There's like 2 of those you probably didn't get into. So 9 trades that you did get into. So you gave up, say, $90 on those, but you lost $60 on this one. So, I mean, yeah, you're net ahead by holding on, but you don't know that. And the stats don't, I mean, sometimes you'll get a 2 or 3 in a series that'll nail you. So just trying to, help you out on that. Now, the long side would have been profitable. It's the short side that would have got you. So, but either way, so we got 9 out of 10 entries. 2 not being filled in the last 12 months would have been profitable. And the one that was not profitable had to have taken profit, like at the 15 or 85 level, would have been able to take profit. Just understanding binary pricing and know how it works. It's delta. So as it got really close to expiration, it ran down. It would have been easy to take profit on that trade. Anyways, but that's one of the ways like my mind works, is how I look at things. I try to see patterns that exist that have something consistent. So not just it just happens to work, but this is when this report comes out, it moves, it goes this far, and then it reaches this movement for the day, and then it's done. And I love that too because it's a Friday. So will often work very well on a Friday for you. So that's our little Friday trade there. We got, let's see, we might have one other one. We got the Canadian report coming out, and we have the U.S. Quarterly GDP. So let's check this out. We got Canada's GDP. It's going to be released. Expectation is negative 2.2%, negative 0.2%. They're at 0.2%. And let's see here. We got an expectation on this of dollar CAD, about 57 pips. Not a big fan of that. Average move with only about a 40% probability of movement. So probably not going to be looking at the UK quarterly GDP on that one. Let me check out more recently the Canadian GDP, I mean. And we got, okay, so recently we dropped about 75 pips between the announcement and the close. Now it was pretty low in that first couple hours. So we really didn't get the big movement. We'll see that was January. December, we had a movement, a max movement, about 15 pips. November, same thing, not a big mover. October, let's see here, about 40 pips. See, September, about 30 pips. August, about 30. July, we had a big move. It was 60. June, we had about 55. May, we had a little over 50. April, we had 55. March, like 15. And March 1st, that was March 28th. March 1st, we got about 50. So, yeah, I mean the stats are pretty on. They're even current in the sense of like I'm looking at 2-year stats. So the last 2 years about 41%. We're about 40 to 50%. Moved 50 pips during that time frame. So based on that information, I definitely would say that probably not one you want to straddle or strangle. And then as far as how do you trade it? Let's see here. All right, well, it met the expectation. So forecast is 0.2. It came out at 0.2. Market went up and ran, basically maxed out at what time? 9 o'clock, and then turned back around for the rest of the day. Let's see, the time before that, we had the Canada GDP. It was better than expected. It actually spiked down a little bit, then ran up, and then came back down. I'm just trying to see if there's anything on here actually showing us any kind of pattern or not. When it's better than expected, it ran up and stayed up. Better than expected, ran up, came back down. Yeah, even the expectation results, the fundamentals, the chart's not even following the fundamentals.
White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. So we're just going through, not really finding anything there that I like on the dollar CAD as a tradable release. And I'm looking over, we also got some other potentials, but we got our preliminary GDP that usually is a pretty good mover. So let's check that out, preliminary GDP, and my standard stats on that. Going to give me, let's see here, what do we got? On the GDP announcement, we have some good moves. Okay, good. That's what I was looking for. All right, so we had expectation of 2.6, a little bit lower than where it was last time at 3.2. We're looking for it to be off by about 0.3, hopefully, to get a nice big move. But the average move on the U.S. GDP, this is probably going to be our big pick of the week, okay, for as far as our favorite trade of the week. I'm going to go with, let's see, looking at everything, probably pound dollar, potentially euro dollar. Both of them move 50 pips, a little over 70% of the time. And pound dollar and euro dollar, pound dollar moves moves a little over 70 pips on average high to low. And euro dollar moves about 60 pips on average high to low. So pound dollar moves a little bit more, but it may also cost more. So it may or may not be the better trade. Okay? Let's see here. So we'll get at that now. Let me go into the details on this report. So the U.S. GDP coming out. Let's see. Let me. I'm going to sort of like now down look at the pound dollar, euro dollar just over the last year, and give you a little bit more in-depth analysis. So over here on pound dollar and euro dollar. Okay, so let's find out the details here. What do we get? The last report was not one of those big movers. Okay, so here's a heads up on that. Last report, pound dollar got about 45 pips. Euro dollar got about 27. Okay, so not a big mover. Okay, here is something to notice. Okay, so I'm just going through the details. I'm looking at it. And, you can use something like Forex Factor to see some of this historical information. Part of what I'm looking at is to see, what were the numbers and were there revisions on them. And you got the GDP, quarter over quarter, and the preliminary GDP. And it looks like the GDP quarter over quarter, which may not even be noted here in Forex Factory. Let's see. They don't even have the right one on there. But the GDP quarter and quarter of advance, they're missing one. That's really interesting. I don't think I've ever seen them do that. But what I am seeing is that it was actually lower than expectations on the small move. So, and let's go back. Let's look at this other one here. What do we get on the previous report? Okay, we got about 60 pips on both. We got a good move there. Yeah, I'll go through and I'll do a little homework on this one. I'm going to dig into it and see, but it should be our best trade. I just want to go in and I want to make sure we really tie down the numbers on that. And also I want to figure out why there's a difference in two different economic calendars I'm looking at. So if I have to, I'll go look at the source and look at the actual numbers posted up. But I want to make sure I get all the right details for you before we go over that trade. So we're going to come back. We're going to review that trade tomorrow in more detail. But you do have the CAD trade. We talked about that, probably just avoiding that one. And we also talked about the probably the other best trade to do would be your pound or euro on the GDP trade. So we'll do a big wrap, but the good news, it's not good, but no big news trades today, no big news trades tomorrow to focus on. And we'll get you set before the end of the week, step by step, trade by trade. All right, y'all have a great day, and I will see you tomorrow. Stay tuned for another great show right after this.
Hi, I'm Steve Rhoades, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhoades Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.